Thanks you all for coming. This is great turnout. And kind of to Teddy's story, from Motel 6, now we're hosting our own summit. What a great, turn of events. But yeah, please filter in a little bit more, sit down. Don't be shy, the front row is completely available. But, we won't call out people. So why don't we start with a round of introductions? We have a great panel up here. I know we have some of the teams that we're working with. And we'd love for you guys to introduce. Why don't we start? Yeah, with you, Jacob.
Sure, how are you? Jacob Laufer, I'm the Chief Growth Officer at M0. M0 is a platform for builders to develop their own stablecoins. And M is our native building block for helping them develop those stablecoins.
Thank you. Hi, everyone. I'm Romain. I am the CPO of Midas.app, and we are issuing ultra-accessible RWAs that we are calling liquid yield tokens, meaning that they are yield-bearing, and liquid meaning that you can mint and redeem instantly.
Thank you. Yeah, what's up, guys? I know the price of the ETH, Bitcoin, everything, not good today, but
don't look at that.
Be happy. Come on. We have hope. We have everything, right? So just don't look at the price now. I mean, yeah, let's look at something else like RWA, the future, right? So I'm Flex from Stable Labs. We're actually working on several stablecoins. One is Delta Neutral, now number 10 stablecoin, globally, and we're also working on the second stablecoin, which is a TBO-backed stablecoin. And our vision or mission is actually to connect DeFi, CeFi, and TradFi with crypto. With blockchain technology. So that's what we are working on, and that's the future, I think. Yeah. Thank you.
Awesome. Hey, everyone. I'm Bo from Paxos. I'm one of the product leads at Paxos. Paxos does a bunch of things, including stablecoin issuance. We've done PayPal stablecoin. We recently launched USDG in partnership with Robinhood, Kraken, a few others. We also do stablecoin payments. We power crypto brokerage solutions. So we do a lot of things across the market, but it's great to be here.
Yeah, no, some of the best partners, I think, in the space. And I think stablecoins have really grown tremendously over the past, say 1-2 years. And I see everyone taking quite different approaches, right? I think you have a lot of people doing the general yield bearing, but then you also have people who are, like you guys, Midas, who are making these types of more esoteric strategies on chain, and you guys as well. So I think it's great to see that. Maybe you guys can give a bit of a highlight about where you think, at least in your company's perspective, the evolution of stablecoins are doing, and some of your products that you're currently most engaged in. Why don't we start with the other side?
Sure, I'll start on this side. So Paxos has issued several stablecoins over the years. We even issued Binance's stablecoin back in the day, BUSD. More recently, we've been focused on PayPal stablecoin, PYUSD, USDL, which is our yield-bearing stablecoin issued out of Abu Dhabi, and then most recently USDG. I think the unique thing about Paxos' approach, and our approach may seem more conservative than others from a crypto native perspective, but every single one of our stable coins is overseen by a financial regulator. So we have the NYDFS in New York that oversees PYUSD and USDP, FSRA in Abu Dhabi that oversees USDL, and then MAS in Singapore that oversees USDG. And why have we taken that approach? It's not really just for the sake of saying we're regulated. There's two reasons that we believe why that approach is really important. First reason is stablecoins are kind of like the building block in our perspective of what everything else will get built on top of in crypto and eventually TradFi. But having that layer be super safe, trustworthy, have all the protections necessary, we think is really important, because if you build on top of kind of not a secure base layer, you're kind of building a house of cards. So our perspective is, from a building block perspective, you want to have the stable coins be regulated, extremely secure, give all the consumer protections possible. But on the second piece is look, all of us, and I think part of Plume's thesis is hey, eventually institutions are going to come in and adopt tokenized assets. And at Paxos, we spend a lot of time talking to these institutions, these TradFi players. and they need a level of assurances of how the reserves are managed, where they sit, what happens in the event of bankruptcy, what happens when certain things go wrong. Having those things encoded in law is really important to bring the TradFi institutions on, because they're not really going to just kind of trust you on it, right? They need the assurances because they have too much to lose. And so that's been the core of our approach. And so again, lately we've been focused on USDG, which has been partnered with Robinhood, Kraken, Anchorage, a few others. And then USDL is our yield-bearing stablecoin out of Abu Dhabi. So that's what we've been working on.
Thank you very much for the sharing. I really agree that definitely for a stablecoin company or stablecoin protocol, we really need to focus on trust, like how we prove that the reserve is there, right? So this is one thing. Another regulatory perspective. But what I really believe in the future, for the future, is actually how we really use it. I mean, not just RWA, right? Also payment as well. Like previously, stablecoin were majorly for from the very early stage, stablecoin was built for Chinese because we no longer has access to like a RMB to BTC trading pair. Therefore, Bitfinex brought this concept of USDT, and now it's one of the biggest stablecoin in the world. But I think nowadays people are more focusing on other usage, like not just trading, right? So RWA as well. But previously, I'm not a believer of RWA. Like even half a year ago. I mean, this is the reason why we didn't talk before. I mean, I'm not a believer of this RWA concept. But things changed. I mean, in last few months, lots of like a new AGI model came out, like including GDP 4.0, including DeepSeek, R1, and those models can dramatically change the use for crypto. I mean, previously, crypto is very hard to use. Blockchain is not for like everyday people. If I want my mother to use crypto, it's a nightmare, right? So you need to teach her the private key, all the things. But I think with AI's help, in the future, AI agent will be the interface between human being and crypto. So I think DeFi is for AI, crypto is for AI, blockchain is for AI, but AI is for human being. But with AI's help, I think I see the hope of mass adoption. And with mass adoption, I see the use case for RWA. Previously, people like us, we try so hard, we kind of find a way, a path to this world. We are not coming here for T-bill yield. We're here for Trump token, right? But I think in the future, like when my mom can use crypto easily, I think people come to crypto world for the right product. I mean, I'm not sure if you know Alipay. China's payment company. Like 1 decade ago, they brought up a product called Yuebao, a kind of current product, a current account. Like people can deposit $1 to buy money market fund. Before that, bank is actually the major avenue that people put their money in. But after that, Chinese people move all the funds from like a bank to Yuebao. That's one thing. I think in the future, when T-bill is ready for everyone with very low barrier, then like we can actually get more and more money from banks, from the clients from the banks to our avenue. So I think the key thing is actually we need to have a mass adoption before we have RWA to be reasonable. But it's here, right? AI agent. I think lots of people are working on the smart wallets already. So I think mass adoption is coming within several months only, not just a year or 2 years. I think it's coming. Maybe next quarter. I saw many people are working on smart wallet, including OKX, including Binance. So I think I see it. Yeah, I see the real hope.
Thank you. So at Midas, what we are doing again is that we are issuing yield-bearing tokens. Some can say that those are yield-bearing stables. And let's say what we are doing is goes beyond that because we are issuing also, like for example, tokenized crypto hedge fund strategies that are high yield, that's for sure. But is it liquid enough on the to be used as a way to make it a stable coin? Maybe not. So we have really two sides of the business. One is like high yield-bearing products, and the other one can be seen as yield-bearing stables. When we are like tokenizing T-bills, for example, I'm sure that our friend at M0 will talk about this too. Obviously, like whenever you have very, very deep liquidity, this can be used as stable. Otherwise, you may encounter some systemic risks.
Yeah, and I think for your point, like you guys are working on a lot, and to be clear, like you have the T-bills, but you also have products that are most associated with like yield strategies that are like DeFi products, right? You're working with that. Maybe you can elaborate on that a little bit more.
Yeah, exactly. So actually, this is very new. So we launched that last week, and we partnered with large players on the market like MEV Capital, RE7 Capital, Edge Capital as well. So all those guys are capital allocators. Work with like many people who are looking for high yield strategies, and our regulatory environment within Midas allows us to basically make those types of strategies very, very accessible. So far, if you wanted to access to those types of strategies, you would have to be probably a high net worth individual, go through a KYC process with them, and so on. So we are removing barriers while remaining fully regulated. We are issuing our tokens out of Germany. Those are regulated by BaFin. We even have a prospectus that allows us to reduce minimums and whatnot. So yeah, tons of cool stuff being done.
Very cool.
So at M0, we're building for a future where we believe that every financial application or really any major like financial distribution platform is going to embed stablecoins into their business. I think we all know, like being a stablecoin issuer, good work if you can get it right. Tether, the most profitable per capita company of all time, right? Everyone wants to be a stablecoin issuer and own those economics for themselves, rather than do distribution for the likes of Tether or Circle, right? And I think the issue for them is that aside from standing up all the infrastructure on the collateral side, is actually like standing up like a liquidity network and plugging into that. And so at M0, what we're doing is like developing a platform that developers, builders, really early on in their life cycle, even large corporations, can very quickly spin up their own stablecoin based on a single interoperable standard. So all stablecoins built on the M0 platform and built on M, our wholesale building block, maintain the liquidity of the entire network of every stablecoin built on top of it. And then they can add on any custom branding, very sophisticated downstream yield distribution logic, any compliance additional features or KYC AML features that they would like, all while maintaining interoperability. So the idea is that we want to create a federation of issuers who are all sharing the same liquidity, allow them to own the economics, but be the first ones to really build this platform to allow them to spin up their own stablecoin and really own it immediately. And we really believe that in the next 5 to 10 years, every financial application is going to do this.
Yeah, I think this is really cool, right? Like, each one of you guys is taking a pretty different approach, given how crowded I would say like stablecoins has become over the years. Like people see what Circle has done and like, oh, I want some of that pie. But to really do that, you have to actually differentiate yourself in a certain way. And it's interesting to see, right, from your guys' perspective, like being able to white label coins and also have people build on top of it, but also have the M0 Prime product that we know and love today. I know Paxos is doing a lot of the similar type of work with maybe more of an institutional focus there. And Midas is also launching these great strategies that yield closer to like 15%, I could say,
Yeah, like
so,
20 even.
Yeah, and then you guys on the AI agent front, I saw that you guys released the AI agent. So incorporating that into like, I think the DAO governance side is really cool to see, right? Like DAO governance has been one of the most, pain in the butts I think that you have to deal with. So having AI in that kind of perspective, it's really cool to see. Okay, I guess like one of the maybe like we got the intros around now before the crowd falls asleep. We got to get some hotter takes from you guys. What are the biggest challenges with growing on different chains? I think like, you've seen a lot of, with the main chains, you see a lot of, I would say like 80% of it still being within like some of those core stable coins. And what are the challenges you guys have seen? How do you guys approach it? And yeah, how do you guys approach it, like becoming bigger on those chains and working like that? Maybe start with you, Jacob,
Yeah,
on that.
happy to start with that one. I think interestingly, there's a misconception, at least from my perspective in the market, that users really have a preference amongst these various assets. I think our thesis is based on the idea that the distribution platforms themselves, so that whether this is chains or applications, they're the ones that dictate the usage, right? And like people don't actually, well, maybe to some extent they do care about like earning some yield on it, but really what they want is utility. They want to trust the brand of the product they're using, and they want the distributor to tell them what to do and make it easy for them. And I think, on the chain side of things, I think a lot of chains, again, I don't know if this is controversial, right? They just are very reluctant to be hands-on. Like everyone wants to set the table. They all want to be like credibly neutral. We want Circle to come in, Tether to come in, right? But what end up happening is that they allow those to capture the chain themselves, rather than being proactive in like pushing alternatives. So I think that's been the major hurdle, where people who actually want to see, diversification in their own networks, in their markets, need to actually go out and build it, right? Instead of just being table setters.
100%. I agree with that.
Yeah, I'd say that it's one thing to just deploy on one chain. It's all about the network. Being there all alone doesn't really make sense. So you need to partner with others in order to be part of an ecosystem, and this is how you grow. Like you get eyeballs, and eventually traction and adoption will be there. You need to build your brand, of course, whenever you are starting on something new.
I think I still think that cross-chain issue is a user experience issue, right? So, like we human beings are quite lazy. When you just have $1 or $2 at ETH and you want to move to Plume, I think there's no reason for me to move it because it's complicated. The fee is high. You need to kind of do the cross-chain manually. You need to do lots of things and facing some security challenges as well. So I still insist on my theory that open ledgers for open AI, and in the future AI agent is helping you. So every night the AI agent will help you to calculate every chance yield maybe. Maybe the AI agent will figure out that Plume is going to have a market campaign tomorrow, and then you will suggest people to move funds from other chains to Plume, for example. So I think fundamentally it is really the UX issue. So once UX issue resolved, cross chains like sending money between different people or sending money between different institutions. For TradFi, for example, if you send money from HSBC to maybe Bank of America, that's kind of the easy thing, then things will be easier. Still a cross chain for everyday people, for people outside this room, still it's even something that they don't understand. So I think we need something easier for them to get through. So yeah, I think the challenge is user experience, and we need AI to help. Yeah.
I know you're looking for hot takes, but I actually agree with Jacob and M0's like part of their thesis at least, right? Like the distribution platforms are going to be the ones that actually drive the adoption of a certain token. But the thing I would maybe augment his point on is people always get hung up on especially at Paxos, people are like, why don't you issue on our chain or XYZ chain or whatever? And the thing is it's not technically that hard to issue on new chains, but that is literally day zero of getting on a new chain. There's liquidity you need to bootstrap, you need to get integrated to every venue. You need to go do all the things to actually make it valuable. And to Jacob's point, there's a centralized effort that it takes to make that happen. I can go issue on a new chain tomorrow, but it's just gonna die, right? You need capital, you need to invest in actually growing it. And it's like launching any other product, whether it's in fintech or outside of finance. You need to have a marketing budget. You need to have the ability to go get it integrated and adopted. And now, if you're a single issuer and you go issue on 10 chains, you've just fragmented your war chest by 10 times of what I can go see liquidity on, where I could spend marketing, who I go talk to, what my BD team does. Versus if you have the distributor or the chain themselves perhaps saying cool, this is the one we're making a bet on, we're putting our money behind it, our time behind it, then it's got a chance of success. Otherwise, if centralized issuers go issue you can do it, they'll just die.
Yeah, I think that's a great point. The work only starts, right, once you integrate that chain, and there's a whole path to that. And I do think, like, sometimes folks are just concentrated getting that integration, making a big PR release around it, and then, ultimately not backing it up and following through. And I think that's, like, one of the core things about Plume is, shameless plug here, but we are working with you guys and hopefully putting you into products that make sense. And then also, a chain for just RWAs that function as the base asset. That's what powers the ecosystem. And we're encouraging all our DeFi applications to integrate RWAs at a core level rather than just like concentrating on the main, stablecoins.
Totally. And if I could just add to that, like, if any of you are out there building a chain or like, it's like, if you want to go talk to issuers, don't lead with like, we'll make the integration really easy for you. Like, the sophisticated issuers, like, don't give a shit about the integration. They're like going to be like, what is your go-to-market plan? How are you going to grow it? What are you going to put behind it? And if you want to have really effective conversations with issuers of whatever assets, stablecoins or otherwise, I think coming up with like the go-to-market plan, what you're going to invest, is going to think that's going to open eyes, and not like, oh, we'll give you 3 engineers for 2 months to do the integration. It's like, okay, great, thank you, but that's not going to be the thing that captures their attention, from my experience.
Yeah, 100%. I agree with that. I just think, there's so much work to be done after that, like you said. And I feel like it also sets up a bad stage, right? Because then everyone gets so tied in an integration and, working through like a huge grant, for instance, for things like that. It just, I definitely think there's better approaches. And hopefully, like, you trust us and we trust you to kind of grow in our ecosystems. That's great. Okay, so moving on, I had a question basically beyond treasuries. We've seen treasuries done. I think each of you have like a treasury product that somehow is tied to that. What other types of collateral are you exploring? Maybe, Paxos, you guys start talking about the USDG network that you put together. I think that's an innovative way. But basically, what are you doing beyond the treasury side to like expand into different forces of yield or different forces of collateral that's backing your stablecoin? Yeah.
None. They're not stable coins.
Unfortunately, I agree right there. Like, it's like the base layer, again, like, goes back to my like first point where it's like, hey, if you're going to build everything on top of stablecoins and this like new financial system, like, the base layer should be as safe and as conservative as possible, and like that's always been our approach. But to your point, I think the innovation maybe comes on the distribution model and less on the collateral model, right? With the USDG model, what we went and partnered with Robinhood, Kraken, Anchorage, several others coming. Like, the idea is like, hey, like, we all own like the success of this asset, right? And we can earn rewards from the yield, but also from minting and redeeming benefits. And so I think there's innovations to be had on like a distribution model. But again, like at Paxos, we've been pretty conservative of like, hey, like, the reserve should be look a certain way and be a certain level of liquidity and safety, because we're encouraging people to build on top of that, right?
Yep.
Yeah. I totally agree with you, right? So, whether our first product is a delta neutral stablecoin, which is based on like you loan a Bitcoin and you short Bitcoin perps on a exchange, I still believe that's only our go-to-market strategy. Rather a real stablecoin. It's only a yield product. It's a financial product. So I believe that the fundamental thing for a stablecoin should be based on or backed by the most conservative assets. For example, TBO. Right? So that's a lowest risk with a reasonable yield product. So I believe in that when you want to build a stablecoin, you need to have the most conservative assets for the back, but not the cash in the bank, because you will have risk. Back to March 2023, if you remember, USDC depacked because of the SVB bankrupted. But TBO won't have this issue, right? So if you have TBO custody with some sort of financial institution, then that'll be fine. So I really agree with that. But we still have another ideology, is that with this kind of TBO as the fundamental reserve, you have the access, because TBO itself is a fundamental financial collateral for everyone. Like every institution, everyone in financial world, even in TradFi world, would recognize TBO as collateral. I think TBO is the old age super collateral. Everyone recognize. So I think based on blockchain technology, we have many approaches based on that. We can share, we can actually have the TBO as backend, and then we have TBO kind of running everywhere, and we can actually have the access on top of the TBO yield. So for example, our second product, we have TBO as a back, but actually with the TBO, we actually get line credit from exchange, we get line credit from TradFi, so we can actually build lots of other vaults on chain, right? So the vaults may access to the first product, delta neutral product. The vault may have access to TradFi, like basis trading, like lots of hedge funds, they have basis trading desk. So those yields will be brought to block on chain that if we have the TBO as a back. So TBO is fundamental. Yeah, I think I have no other arguments here. Yeah.
So for the sake of the discussion, I will disagree with the three of you. No, obviously I agree. But I would add that in traditional finance, I'm thinking about credit Lombard credits, where you have like, well, if you are wealthy enough, you go to an institution and you put as collateral your ETFs, basically all your wealth, and against that you will be able to borrow dollars with that. So you never have to sell your collateral, and you can borrow dollar and live on this. Some people do that. In a way, we could reproduce that also on chain with RWAs, and this is already something done. Like if you look at what Aave is doing with their GHO token, the Go token. If you look at, obviously Maker is also doing that in a way, using crypto assets as collateral. So you can also replicate this model. From there, like how do you avoid the risk of having a DPEG? Would obviously come to you need assets that are quite stable and deep liquidity for them whenever you have people who want to whenever you need to liquidate the collateral. The LTV would matter also, and this is what is done in Lombard credits. Like you can only borrow up to 30-50% of what you have set as collateral.
Yeah, I don't know if I have much to add here. I think that maybe one thing I would say is just zooming out is that just when you're developing a stablecoin, the most important thing for stablecoin is solvency, right? Like no questions asked solvency. And so that means, again, you can never eliminate risk, but your credit risk, duration risk, counterparty risk needs to be as limited as possible. And even with like very impressive structured products like you guys are building, and obviously Athena is like the big one, right? Is I think some people are taking the wrong lesson from these things. These are excellent structured products. We have a lot of people who come to us and say, oh, we want to build a stable coin, but could we include like the basis yield in this, you know?
Exactly.
And in some places, it's not my place to tell them, like you're an idiot. But like I just think that people do not really understand the risk fully because these risks are really at the tails. Yes. But like as you begin to grow, that risk becomes like tremendous. And it's great to build things on top of stablecoins and add yield. But those things are not stablecoins. Like I think people are taking the wrong lesson from Athena, that like they made a bet on branding something in a certain way to scale. I think that bet worked. That doesn't mean that everyone should try to replicate that because it's a ton of risk for themselves, honestly, like from a liability perspective, but also for all their holders.
Yeah, no, I think it's a great point, and I'm glad you took the bait on the question there. But of course, yeah, I think like what Athena's done is markedly different, and it is, to your point, more a structured product, right? It's not a stable coin, but I guess like branding, narratives, and crypto tend to like fall all in their one bucket, and everything gets classified as that. But yeah, what they did is impressive. I think people are taking notice, but yeah, maybe we have to call them in more structured products. But I think regulatory wise, it's easier to grow when it's labeled a stablecoin. So yeah, good perspectives. And we're seeing everything back from like Bitcoin-backed stablecoins to every yield strategy put back into a stablecoin. And yes, I do hope we don't have any systemic risk. And maybe this is a good point. To start off into the next segue, the question I had is like, how do you see maybe some of those strategies leading to those more systemic risk, right? Like we're seeing different narratives taking shape. I think Bearer has their stable coin as well. They're all backed by different things. And like, could you see, an interesting take where that would have rippling effects through the market such that in the fact that, back in the day when some of the former crashes happened? Jacob.
I mean, I'm hopeful now at this point. I think like most stable coins that have proliferated to size are pretty much following the same playbook now of like T-bills over collateralized by T-bills. And again, that can expand a little bit, right? Like repo, right? Overnight reverse repos, et cetera, right? Like close enough to that. I don't see honestly a ton of like systemic risk. Again, like if one of these structured products did end up becoming $100 billion, was embedded like everywhere and used everywhere, I think that's a different story. But I think at the current size and even projecting growth into the market somewhat, I think we're going in the right direction to avoid that. And I think people have settled on like really good, both like collateral standards, but I think the point Bo was making earlier about like structuring insolvency remoteness, right? Just like being very open and transparent about that. And I think we're moving in the right direction.
100%. And this one I don't think has to go down the chain. So if any one of you have thoughts, feel free to just chime in. But
I think he got it all.
awesome. All right. Last.
I have one
Yeah.
more point. Yeah, not AI agent this time. Yeah, but
Go for it.
actually, stablecoin or anything, any financial product here we are providing is actually for mass adoption, right? We are not providing products to only crypto people. So we really need to consider like what kind of collateral the normal people can accept. Like US dollar, when they use gold as their collateral, I think because gold is well accepted in that world, like a US dollar is not in the day one, they are not it's not just backed by government bond, right? In the day one, not even day one, maybe back to 1933, it's backed by gold. And after maybe 40 years, in 1971, that depacked from gold. But in the first phase, still like a US dollar, even this like a number one country in the world needs to consider what people can accept. So I think we can think about innovative solutions in the future, but in day one, we should consider like everyday people's acceptance, like whether they can accept this kind of structure. But yeah, that's the only point.
Can I add something quickly to that? I
Go
think
for
that's
it.
a really good point, and the other way I would like phrase that is like, it's great to have structured products. They're interesting. They open up access. They give people access to things that only rich people get in other places. But with crypto and structured crypto products, the burden of education goes up pretty significantly every layer of complexity that you add. And like if I used to work in like fintech. I used to work at Square and Cash App, and it was a very defined environment where we could educate our users about every single thing that was on there in a very closed environment. Crypto products by nature are like open, right? And so cool, we can do all these things, but the burden of education and awareness is like way higher than I think what a lot of projects are putting into. And it may or may not be a systemic risk, but it is like a crypto brand risk. If like normies get burned by these products one too many times, it's really going to slow down adoption of crypto on a broad basis. And so great, let's do structured products, but I hope the people that are doing them understand the burden of education that they're bringing on themselves in order to make it work.
Do we need to bring back Gary Gensler?
It's not about Gensler. It's about yeah.
Yeah, no, I think it's a fair point. I think, people say just look at the docs, but, sometimes who's reading that? Like, it is, there is a higher threshold that we should maintain for educating folks. Totally agree. Yeah. Well, all right, I think we're at the end. Please give a round of applause to our amazing guests here.
Thank you.
They provided some great perspectives, and yeah, please find them after to chat with them.